Dear panelists, dear participants, welcome back to day 2 of the International Conference on Inclusive Insurance 2021. Today is the day which we called Climate and Pandemic Risks. The session 5, which you are logged on right now, will be talking about agricultural and livestock insurance. As you may know, the conference has different approaches of putting the content together. We invite people through a call for proposals to submit a presentation or a paper, and you can also organize a full session, which is focusing on one topic. Now, this session today has 3 speakers that individually submitted a proposal and that were accepted by the steering committee. So we have an overarching topic and we have some guiding questions that we gave to them, but you will see 3 very individual presentations. Before we start, very quickly, a few housekeeping slides. Please put yourself on mute while everyone is speaking. This session is being recorded and will be made available on the conference website starting next week. Please, we will have time for Q&As, so put your questions in the Q&A function under Zoom. And if you have any technical issues, please message the MIN executive team via the chat. Now, let me briefly introduce the speakers, also in the order of appearance later. I would like to welcome Matthew Szakowski. He is Senior Advisor and Executive Director at ICII Advisors in Australia, a strategy research and capital advisory company dedicated to work on increasing rural finance. Over the past 15 years, Matt had worked in the areas of private equity and development advisory for a number of leading organizations, such as GDI, Argus Investment, Dahlberg, and Deloitte. Matt holds a master's degree in sustainable development from the University of London. So now, Matt, welcome to this session. Thank you for joining from Australia. That's another sign of how many time zones we cover in this conference. Now, our second speaker is Chentil Kumar Chelanlilari. He's a rural development professional with 20 years of experience in monitoring and evaluation, rural insurance, financial inclusion, and gender mainstreaming. He currently works as a monitoring and evaluation manager at the Tamil Nadu Coastal Sustainable Livelihood Society in India. In Tamil Nadu, an innovative mutual risk insurance product for fishing boats and motors is being developed. 8 microinsurance products are being refined, and their uptake by poor and lower women and men is being ensured. And Chentil Kumar holds a master's degree in architectural extension from Dr. B.R. Ambedkar University in India. So welcome to India, Chentil. Thank you for joining. Our third speaker is Eleni Vakaki. He's an index insurance specialist at eLeaf. eLeaf is a remote sensing company in Wageningen, Netherlands, with expertise in agricultural and water management. Since 2010, eLeaf has been working with reinsurers and insurers, brokers, financial institutes, offering satellite-based index products to support index insurance service to smallholder farmers across Africa. She's responsible for the product development of eLeaf's index insurance solutions, while her day-to-day activities also include project management and writing proposals for international grants. And Eleni holds a geomatics engineering Master of Science from the ETH Zurich. So welcome, Eleni, and thank you for joining. Now, the guiding question that we gave to the speakers are around main barriers for agricultural and livestock insurance. What can help to increase outreach? What are success factors and what should be avoided? Now, as we heard yesterday, we need to measure things, to manage things, and to know where we stand. And I would like to invite Matt to start his presentation. Matt will speak about a stock-taking experience and a very interesting research project that gave us an overview in 2018 on availability of agricultural insurance, and he will also talk about the lessons learned since they have done that project. Matt, the microphone is yours.
Thanks, Dirk. It's a pleasure to be here, and I'm really excited to share some of what we've been working on and thinking about through some of our latest work on agri-insurance. Just in terms of a few more sentences on what ISF Advisors is all about, as Dirk sort of outlined, we're an advisory firm that tries to combine research, strategy advisory, and deep financial advisory expertise, investment banking expertise, into one offering that really tries to move the sector forward in terms of financial solutions for the rural enterprise market. So that's focused a lot around smallholder farmers, but also agri SMEs. We've been around for about 8 years, and over time, insurance has started to feature more and more in the mix of products that we've really focused on. So in 2018, we partnered with the Syngenta Foundation to look at insurance in a global sense, in the form of a report and a convening. So many of you will have seen the Protecting Growing Prosperity report that was published back then, which really established for the first time some global numbers for this product market. So at that point, there'd been a lot of experimentation around different types of indices and approaches to reaching really difficult to serve smallholder farmers. But no one had really stepped back and looked at just how big is this market, how much is being addressed. So through that research, we were able to establish that around 270 million smallholder farmers in less developed countries required about $60 to $80 billion in agricultural insured value coverage. So that was an annual premium of around $8 to $15 billion. And we sized that gap in different regions of the world. So in Africa, Sub-Saharan Africa, the coverage gap was about 97% of all smallholder farmers had no active insurance product. Whereas in Southeast Asia, that was much less. It was around 25%. The other thing this report did is really take stock of the ecosystem that had grown up around this solution set. So we looked at how different intermediaries, aggregators, insurers, reinsurers, all came together with the support of donors and other programs to start to create these products. And that ecosystem view of the market is something we've sort of carried forward into this latest research. But the other thing we did was really take stock of what products are actually out there, looking at different types of indices that were being used, how prevalent those indices and those products were in different regions of the world and different approaches to distribution. So in that report, we looked at about 100 different agri-insurance offerings, and we think that covered maybe about 80% of what was out there in the world. So that landed with an action agenda, and that was something that got taken into an industry dialogue in 2018. Since 2018, it's almost self-obvious to say that the world has changed a lot. So the climate crisis is escalating. It's become really obvious in terms of the number of extreme events like storms and floods and droughts since the 1980s. COVID crisis over the last couple of years has really highlighted rural communities' extreme vulnerability to shocks, and in some ways governments' lack of preparedness to offer social protection at the level of scale to deal with such a crisis. And in more recent years, this new emphasis on food systems and how different actors all need to come together to ensure that not just food is cheap and available, but it's also an equitable system that's protecting the most vulnerable actors within that broader ecosystem. So within this context, ISF and the Microinsurance Network, the MIN, we're currently working with a consortium of interested donors. So the Bill and Melinda Gates Foundation, the Syngenta Foundation, Swiss Re Foundation, and FSDA to take stock again of that agri-insurance market at a global level. And so what I wanted to do today is really just share some of what we've been learning through that process. We've done around 2 to 3 months of industry consultations and study. We've looked again at everything that's been written about agri-insurance, distilling a lot of the learnings over the last 3 years. But we've also spoken to about 50 odd practitioners in the field to get perspectives from all the different corners of the market that matter, from the donors, from the reinsurers, the insurers. And what we found is probably captured, I guess, most simplistically in these 7 areas of change. So I've spoken in the middle there about sort of this changing context, but back in 2018, everyone was talking about agri-insurance really as a product market. I think what's changed since then is this perspective that agri-insurance is just one tool that needs to work within a more holistic view of food systems and how risks are captured and dealt with at different levels and in different ways with different types of tools. We've seen a maturing of products, so that's really good to see. Back in 2018, we were sort of really quite bullish on what was happening around agri-insurance, but it was very obvious that these products hadn't really achieved the product level refinements and the scale needed to support a more mature market that was going to be around for the long term. So we've seen a lot of maturing in the products, more sophistication around the indices that are being used, scale up around certain types of distribution models, which I'll talk about a little bit more. But it's become really obvious that there's this disruptive leadership role that's being played by a small set of pioneering insurtechs and reinsurers. Data and technology is obviously critical to the way that these products work, and we're seeing incremental innovations around the technology sets and data availability. And we're seeing governments come on board. So whilst regulation always seems to take quite a long time to make sure that the right pieces are in place to support these products coming to market, more governments are engaged, and many more governments are thinking quite holistically about what needs to be covered at the macro and meso levels, and the role of the private sector. And many governments are actually stepping in to be involved in distribution as well. And all of that is leading to both more evidence being generated, which is really great, and a deepening finance landscape where we start to see some commercial capital being deployed to support the innovators, to support those that are on the front line of developing these solutions. So today I wanted, with that to be the sort of context, just to spend a handful of minutes giving you some insight into particularly the maturing products dynamic that we uncovered. So in our ecosystem view, we again looked at the role of different players and reflected that in other product markets, even other microinsurance product markets, what you will usually find is end consumers saying they need a product, saying, I've got a risk that I want to transfer to the formal insurance market, and I'm willing to pay a premium for that. In those instances, insurers usually develop an offering and push it out through their distribution channels, sometimes through new distribution channels, but that's usually the basis for a new product market being established in a country. What we find around agricultural insurance, which is quite unique, we feel, is that the insurers, I guess the end consumers are relatively disengaged. Farmers know that they need to deal with these risks, but don't have sort of the willingness or capacity to pay necessarily for those risks. And insurers are largely following what is being led in the market by intermediaries. So these are a number of insurtechs and technology providers who are essentially creating a number of these products and working then with insurers, to local insurers, to make sure that they can be put out in the market. But it's really the reinsurers and the intermediaries that are working together with donors to bring a lot of these solutions to market. Aggregators are actually now starting to catch on to these being an largely and widely available set of solutions, and there's growing demand there. And what we're seeing is data and technology providers providing a lot of that enabling technology and data to make those products work. But regulators are largely reacting to a number of providers coming into the market. So if that's the industry structure that we're working with, we're talking about a very different type of industry than we see in other types of microinsurance, be it in health or asset protection, funeral insurance. It is a market that is largely being driven by intermediaries and reinsurers. The way that we conceptualized or codified what was happening on the product side back in 2018 was really about describing products in terms of the type of indices that was being used. So back in 2018, people were referring very commonly to area yield insurance, weather index insurance, satellite index insurance as the primary distinction around the products. As we've taken stock this time around, it's become really obvious that that is really trying to describe products around the assessment that's being used. And that's quite different to the way in which we naturally talk about insurance. So in other types of product markets, you really talk about the type of cover and the risks covered in the first instance. So if you're taking out car insurance, you've got motor accident cover, and the risk cover is a motor vehicle accident. Rarely would you be talking about the way in which claims are processed or an assessment is done. So if we take that thinking forward into what we're seeing in the market now, what you'll see on this slide here is what we're calling a product map. So on the y-axis, the first column, you can see the type of cover. We've focused mostly on crop and asset protection. So it goes from, at the first instance, inputs, and then production. As a crop gets grown, there's costs of labor, and eventually it all gets sold, and there's a need to protect revenue. And across the x-axis, so across the top, you can see the types of risks that are covered. Now, as we didn't do a systematic inventory of all the products in the market as we did in 2018, but we did review a lot of products, and we talked to a lot of providers who were describing what they were doing and a lot of the evolution around products. And what you can see on this slide is that there really is a bias still towards what we call entry-level cover. So input cover is the most common, and while we're seeing more risks covered under those products, it's really very few providers that are really trying to push down and to the right. So looking at revenue protection options, and that's simply because premiums get more expensive, and the costs to provide those insurances go up. So we would see a major area of innovation is how can we continue to optimize the way in which these products come to market in order to be able to provide more and more extensive types and levels of cover for agri-insurers, so for smallholder farmers. So that's one thing that we've been thinking a lot about, and there are a number of examples there of types of cover that are pushing down and to the right in this particular product landscape. The third highlight I just wanted to touch on was really on the intermediary business models. So what we found is that there are really three types of intermediaries in the market. Local insurers aside, where there are a few local insurers that are actively investing. What we see in the intermediary market is that there's three types. So there's the end-to-end providers who not only design the index, develop the product, but also support the local insurer to work out the distribution model and how to market that product and bundle it with either the inputs that they're providing or the lending product. And so in some ways, they're providing the full suite of support to bring a product to market. That's quite different from specialist technology providers who just provide more of the back-end product design, index configuration, and hand that off, I guess, to local insurers to then run with the product. There's also a number of consultants and advisors who can help do that on a sort of consulting basis. And all of these different types of intermediaries have slightly different ways in which they sustain their business, from just a fee-for-service model through to for the end-to-end providers taking a percentage of the premium value. So that's important to understand because these guys are really driving a lot of the market and they're driving it from different angles. Final thing I'd wanted to share before I hand it back over is, I talked about the context changing, and we've all sort of over time understood the micro, meso, macro distinctions, but what we're really starting to see is the fusion between how macro and micro meso can come together. So how those different layers of risk can actually work together within a single product, as we can see in sort of livestock examples in Mongolia, where catastrophic risk layers were taken on by the government, and that left space for the private sector market to deal with a different layer of risk. And also integrated approaches on the farm level. So how different types of risk management approaches can all come together and position insurance just to take a slice of that risk rather than all of it. And that's something that I think we're seeing more and more interest in, rather than just thinking about insurance as something that needs to be bundled with one other product for distribution purposes primarily. How can agri-insurance be part of a full stack that's sort of aligned at a country level, and for farmers become part of a suite of solutions that just manages all the different types of risk most efficiently? These are just three or four highlights from our research. There's much more that will be published in a public-facing report early in the new year. But hopefully that's sparked some ideas and some thoughts that we can carry on into the panel discussion, and that some of my colleagues can elaborate on with live examples in the market. So back over to you, Dirk.
Thank you, Matt. Thank you very much. I would like to ask you two questions. One is from the chat, and I had exactly the same question, is how do you define smallholder farmers?
Good question. So we, over 8 or 9 years, have refined our understanding of smallholder farmers. In this instance, we're really talking about farmers on less than 2 hectares of land, and that's the primary distinction that we make. In our numbers from 2018, we break that down by region, and you can see that there's sort of 55 million of them in sub-Saharan Africa, around many more in Southeast Asia, a couple of 100 million, and Latin America, I think there's only 17 million from memory. So we apply a similar definition, and we work on the best published numbers around that distinction.
Okay, and the other question is regarding the governmental involvement. So what really makes me happy is, because I mentioned that in my introduction yesterday, that you see more mixed approaches. So not only a micro, not only meso, but the interlinkages, which I personally believe is extremely important. Do you see any change in governmental involvement?
Absolutely. We've seen, compared to 2018, where sort of one of the biggest programs obviously is in India with the long-running government distribution of agri-insurance alongside their lending product. But we're seeing the seeding of that direct distribution model in a number of new countries, Uganda, Nigeria, obviously what's going on in Peru and Mexico. And we're seeing a sort of much more demand that's growing for that direct distribution role of governments. Sometimes they are fusing insurance into an input subsidy scheme or into a government-run lending program through MFIs or other banks. But sometimes they're just playing a sort of funding role only. So demand is increasing, but we also see more regulatory environments being set up for the private sector to just run with agri-insurance as well, which is really encouraging.
Okay. I see a number more questions coming in the chat. I would like to save them for the Q&A sessions at the end, so be patient and I'll make sure that we come back to those questions. So thank you, Matt, very much for this opening presentation, and I'm really interested in seeing the updated results because that's one of the most important areas since we face climate change. And as I said yesterday, we can't ignore it. It's getting worse and worse, and too many people are affected. So thanks, Matt. And I would like to welcome Chental Kumar from India, and he will be talking about the design of a community-managed hybrid insurance program for the small-scale fishers. And I'll share the screen on his behalf.
Good morning.
And so you should be able to see the screen now. Yes?
Yes.
Okay. So then, Chental, the microphone is yours.
The unique microphone?
Yeah, we can hear you.
Okay. And now this is one of the unique program implemented in the coastal area in India. One of the design, the mutual model, along with the mainstream insurance company, this product is designed. Next, please. Yes. This is the artisanal fishing practices used by these small-scale fishers. This is dinghies, canoes, and FRB boats, catamaran. It's without an OBM motors. This is the small-scale fishers, particularly low-income group households using for their livelihood this fishing activity. And this is the most valuable asset of this kind of this vulnerable section of the marine fishers. The continuous, the disasters, particularly cyclone, after tsunami, there are a lot of cyclones that is devastated their livelihood assets periodically. It will hamper their lives very significant way. That's why the man-made, as well as the man-made disasters also affecting their livelihoods. This kind of, there is no insurance products available in the market to match their aspirations. That's why this product is designed. And second one, the insurance companies are not willing to do this small-scale sector because of there is no separate policy framework for this small-scale fishing sector insurance. And secondly, the high moral hazard in the marine insurance. That is also leads to high cost of this marine insurance. And is the claim settlement delays as well as rejections makes these people more uncomfortable with the insurance. Next slide. Next slide. Next slide, please. Next slide.
I have the features of the
and the claim settlement
now.
Yes. Now it's okay. Yes. The 1%, one of the key feature of this program, based on that, based on their previous experience with the fishing asset insurance, we decided the value of the premium rate. the high cost of premium and mutual mistrust is happened with the insurance company. The fishers are not willing to do with the mainstream insurance companies partnership with them. That's why what we did, the fee forms, the community-based institution is established with the available community-based institutions in the coastal area. We are utilizing them and to form a community-based institution, that is PTSLP, Fishing Asset Risk Mutual Society, that is handling this insurance. And one of the key thing is the market rate, the premium rate is 2.5% plus tax. Here, the minimum premium is 1% is fixed by the mutual, and we got a partnership with the mainstream insurance company. We are paying around 0.43 plus tax to the insurance company to compensate the catastrophic losses. And the individual loss is settled by the fee forms, the community-based institution, and the catastrophic losses is treated by the managed by the mainstream insurance company. And here, what we did, in the mainstream insurance company, 80% loss is treated as a total loss. Here, what we did, the coverage of the spread in the claims time, it is very minimal. That's why what we did, 60% loss is treated as a total loss under this program. And previously, what they did, the boat and engine is a unit of each fishing vessel. Here, what we did, the boat and the engine is treated separately. If the boat is damaged, they will get the claim for the boat. If the engine is damaged, they will get a claim for the engine. That kind of method is adopted under this program, and involving the community in the management of underwriting and claim and administration. In each and every aspect, the community is involved in the what are the documents they have to submit for this. The claim education is most useful for the implementation, useful for the penetration of this insurance product. That's why the client is known to how can we do. The client is know what is the available claim and how it is received, and everything is very transparent manner. It is shared with the community. That's why it's one of the feature of this insurance program. Next, please. This is the outreach. Initial year, the outreach is very low. Second year, that is picked up, and third year is reached nearly 9,000 boats. And the next year, due to the COVID situation, the enrollment and renewal is hampered due to the lockdown, and these issues are hampered. That's why the slight decline is there. This year also, the COVID situation and the catastrophic, some of the weather disturbances also played a critical role. But we hope that this year we will reach around 10,000 boats. And in terms of claims, the second year, the catastrophic is the one cyclone impacted, give more claims. And as next year onwards, there is a slightly, the individual claims only happen in the coastal area. That is also settled by the fee forms. And in terms of the grant support, for the establishment of this community-based mutual, the government has invested around 2 lakh USD as a grant for the initial 3 years for the creating the corpus of the fee forms. That is also very useful for them to increase the moral of the institution, because of they have no fear. The government support is there. That's why they can manage the individual claim. And secondly, the initial 2 years administrative cost is borne by the government. That is also there. Based on that, now the fee forms, the community-based institution is self-sufficient. If the claim ratio increased to more 20%, that will not affect the profitability of the institution, and that is happened here. Next slide. Next. This is the impact of this program. The total value of assets insured under this program, 31 million USD under this program. And the premium of 3 lakh collected from the clients, and the 41 individual claims settled by the community-based institution fee forms, a value of 16,000, nearly 16,000 USD. And the catastrophic claims of more than 36,000 USD is settled by the insurance company for the cyclone Kaja. The employment, due to this intervention, if anything happened immediately, the replacement of vessel is easily done by the community, and that's why the employment of the crew members also protected. And now the fee firms is a community managed institutions having a corpus of more than 30,000, more than 3 lakh USD. And regarding in comparison with the mainstream insurance companies, the product available with the market and the product marketed by the fee firms, the notional incremental notional savings of premium savings of more than 9 lakh to the clients because of the 2.5% here 1%, as well as the tax position is there, it is inclusive of tax. That's why the notional benefit is much more than the investment done by the government to the community. Next, please. Next. This is the learning. Strong community-based, community-owned institutions can create sustainable mutual insurance models, not only for the small-scale fishers. We can develop so many crop-based and so all crops. We can develop these kind of products with the community participation. That will be a need of an hour. We can. It is a good opportunity to enhance, improve the particularly the vulnerable communities, the low ticket items, and in negotiation with the insurance company can result in affordable products, but it takes time. It is we did around 2 years for the design of this product as well as the community consultation, and each and every stage we did stakeholder consultation. And the in future dependence on government grants for the rehabilitation of livelihoods due to this kind of increasing climate change weather events, due to the climate change related hazards. The government spending is much, rehabilitation is required a lot of money. This kind of insurance program will support the government support to the government in long term. And the third one, this is the transparency in the each sector. The insurance company not reveal the exact, always telling the marine insurance is bleeding. Bleeding means that over like that, the claim issue is much higher. But what we did now, everything is transparent. The product is much lower than the available product in the market. The administrative cost of the insurance company is much lesser under this program. Because of this underwriting is done by the community-based institution, that's why the administrative cost is very less. In the catastrophic events only, they will use the manpower for the assessing the loss. That's why in claim administration also their cost is very less. And one more thing I have to highlight this, the initial discussion is very systematic manner we have to develop for developing this kind of product. Because of the trust building is much need for this kind of development of this program. Thank you.
Thank you very much, Chantal, for this very interesting insight. I would have one question for you. Can you maybe explain a little bit how that product was, not the product was developed, but the setup was developed? Who had the idea? Who started that? Who just go back to the history? I mean, fisherman doesn't wake up in the morning and says, I want to have an insurance for me. We were starting an insurance cooperative.
Yes, the PTSRP, the Post-Tsunami Sustainable Livelihood Program, is implemented by the government of Tamil Nadu, supported by the IFAD, International Fund for Agricultural Development funded program. Initially, in the tsunami, more than 40,000 small-scale fishing assets are damaged due to that catastrophe. Subsequently, the cyclone that impacted we developed so many small-scale fish marketing societies in the coastal area. Due to these catastrophic events, the functioning of due to loss of the fishing asset, the functioning of the government investment on the fish marketing society is also affected. That's why what we did, utilizing the services of the small scale village level cooperative, village level fish marketing societies, and we form a collective of the the Apex organization, PTSLP Fishing Asset Mutual Society. That is the eye opener for us. Because of initially we discussed with the insurance company, the cost of premium is much higher. It is not affordable. The terms and conditions given by offered by the mismatch between the product available in the market and what the people need. That's why the product devising at that time we have so many community-based institutions. We utilize them and we tell them this is the opportunity for you if you are going this way. Then they came forward and they developed a proposal, detailed proposal and the operational modality. And we did a lot of business plan appraisal, sensitivity analysis in the long-term business plan and the operational cost and everything. The government supported first 2 years for the administrative cost and a 3-year matching grant based on the premium collected by the community. And that gives more impact to this program. It's now running on 5th year. It is very happy to share with you.
Thank you. Thank you very much for these insights. There are more questions regarding your scheme. I'll save them for the end. And thank you again, Chantal. I would like to hand over the microphone to Eleni. Welcome.
Yes, hello, Dirk. Thank you. Let me share my screen. So yeah, as Dirk kindly introduced us, and as also Matthew showed in his presentation, ILIF is a remote sensing company working as the index provider in insurance schemes. However, we are not confined by that role, meaning that we work very closely with our local and international partners in order to identify appropriate outreach and distribution strategies and ensure an increasing and successful uptake of our products. So in this case, we decided to talk to you about our experience in Uganda. We have been active there quite some years now. And we would like to talk about this case, not only because it's a case of a successful insurance uptake, but also because we have gained valuable lessons learned during our presence in the country. So Uganda is a developing country which is rapidly increasing in population. It's currently it's about 40 million people, but the projections show that it's going to exceed 90 million until 2055. Which creates a huge demographic challenge and poses serious food security issues. About 1 in 10 people in the country is chronically food insecure, with even more suffering from periodical undernourishment, and COVID has, as expected, only worsened the situation. At the same time, agriculture, which is one of the main pillars of the economy and food security, and engages the majority of the population, is at the one hand growing at a much slower pace compared to the population growth, and on the other hand is prone to weather and climate abnormalities and extreme events, which are becoming more and more often as climate changes. Consistent warming trends and more frequent and intense extreme weather events, particularly droughts and floods, have been observed across the country in recent decades. Moreover, rains tend to come later than expected and become much more unpredictable, As a result, farmers are facing difficulties with planning their activities, such wrong choices regarding planting and agricultural practices can lead to missing the optimal period and decreased crop production and increased risk of hunger. According to a study conducted by SNV in 2019, which we can see some maps and projections here. These projections show that the seasonal mean temperatures are going to rise by more than 2 degrees by 2050, with the highest increase of 3 degrees over southwestern Uganda during the long rainy season. At the left maps, you can see the projections for the long rainy season, and at the right for the short one. Additionally, the projected seasonal mean changes in rainfall, so that relative to the past years, the seasonal mean rainfall during the short rainy season is going to increase over most parts of the country. However, it is going to decrease over much of the southern part of Uganda during the long rainy season. These countries' vulnerability to climate change, in combination with the underdeveloped agriculture sector and the increasing population, made the need to increase farmers' resilience and manage climate risk as urgent as it can be. As a result, a work group consisting of several insurance companies and agricultural stakeholders was set up, and they lobbied the government for a premium subsidy. The Ugandan government recognized the risk of weather and climate support to the agricultural sector, and therefore, in 2016, a 5-year pilot was launched. The pilot was called the Ugandan Agricultural Index Insurance Scheme, which is a public-private partnership formed between the government of Uganda, represented by the Ministry of Finance, Planning and Economic Development, and the private sector, which is represented by the Agro Consortium. The Agro Consortium is a coalition of 11 insurance companies in Uganda, which are licensed to underwrite agricultural insurance, of course. So initially, as I said, it was supposed to be a 5-year pilot, but the increasing uptake and success of the scheme led to its extension until at least 2024, and we will hope that it can continue after that. So the scheme provides a premium subsidy across the country, ranging from 30 to 80%, depending on whether it's small-scale farmers, large-scale farmers, and if they're located in disaster-prone areas or not. ILIF has been working together with the Agro Consortium and all of the partners in order to develop index products since 2014. First, we started with the support of the Dutch government under a project funded by the Ministry of Foreign Affairs. But later on, and since the end of this project, ILIF has been working with the Agro Consortium on a purely commercial basis. And since currently, actually since 1st of October, we have started a new initiative with the support of the Insur Resilience Solutions Fund for the next 2 years. So this partnership has been focusing on the meso-level approach, working with a growing network of strong local partners and key distributors, such as pharma cooperatives, agritech and fintech companies, banks, and agribusinesses. You can see some of our partners, companies we're working with in this slide. Bundling and working with strong local stakeholders adds great value to the services offered to the farmers on the one hand, and increases, of course, their willingness to buy the product. But at the same time, it is also very relevant from the point of view of using existing last mile infrastructure to reach the farmers. We are in that way trying to reach as many farmers as possible across the country. However, as you can see, most of the farmers insured come from the western, eastern, and central regions of the country, while only a small percentage, about 10%, comes from the remote areas of the northern region of the country. This is because, of course, much more effort with respect to trainings, sensitization, and distribution activities is required in order to reach those areas. During the past 5 years, we have seen a significant increase in the uptake of insurance. 2017 was the first year that some substantial sales were achieved. And since then, the scheme has been growing, reaching 150,000 farmers last year, and we are expecting to close this year with more than 200,000 farmers insured. And to be a step ahead of you, because you are going to ask about it anyways, the drop in 2018 that you see happened due to a problem with a large client, a bank, who moved away from the scheme for one season, not realizing that that they were not able to use a subsidy that way. So they returned back to the scheme afterwards. Among the different insurance products offered under the Ugandan agricultural insurance scheme, crop index insurance plays a significant role as it reduces, of course, the cost of the service and ensures quick and timely compensation to the farmer. Drought is a risk that contributes to the highest crop losses, and therefore efforts have been initially focused on offering affordable drought index insurance. Since the last couple of years, more types of risks have been included in the index insurance products. As we learn, gain valuable insight from farmers' feedback, and continuously look into ways to improve the offered coverage. So currently, besides the generic drought index, crop-specific index products are offered for farmers growing maize, beans, coffee, potato, and since last season also barley. The indices are based on satellite data, purely satellite data, and more specifically on estimations of evapotranspiration and precipitation. So during those years that we were active in the country, we have learned some valuable lessons. Our role in the scheme is that of the index provider, and of course, it is necessary to continuously improve the products and the risk models behind them in order to capture the actual situation on the ground, to limit the basis risk, and offer products that really improve farmers' lives. However, the index itself is only a part of the equation and the successful insurance uptake. So working with the right stakeholders is of key importance for maximizing the value offered to the farmers and for defining efficient distribution strategies. Of course, governmental support is crucial, and other in the form of premium subsidies or tax relief, in order for the scheme to succeed and scale up. Another important aspect for scaling up insurance for smallholder farmers is that of insurance education. The understanding and trust to insurance is very limited, and therefore a lot of effort needs to be invested into awareness raising and capacity building activities. And finally, we definitely need to highlight, as also Matthew mentioned, that insurance needs to be a part of a suite of solutions that offers comprehensive risk management to the farmers. So bundling insurance with different kind of services, financial ones, input services, agronomic advice, is really important and makes a great difference for scaled up index insurance among smallholder farmers. Of course, we have come a long way, but there are still challenges that we have to address, and we're working towards that. From a technical point of view, there is need to develop location-specific solutions instead of offering the product at sub-county level like it's currently done. However, obtaining farmers' exact location is still a challenge. We hope that we expect that by further employing mobile distribution, mobile money, we will be able, on the one hand, to get that kind of information, so farmers coordinate, but at the same time facilitate outreach and transparency. Another issue that we have been facing is that of the fixed rate imposed by the scheme. So the coverage offered at those low rates is limited, and until now there was no option for additional coverage. The Agro Consortium is currently working and is in discussions in order to either provide a top-up coverage or allow for flexible rates. Also, from a regulation point of view, it is also necessary to have some standards and quality control of the index to make sure that all the products offered are not only relevant to the farmer, but also not harmful to them. And I believe the next session of the conference is going to be in detail about that. And finally, market penetration still remains low, but the capacity for sensitization as well as outreach and distribution has been quite limited until now. But we will put a lot of effort and focus on that during the next couple of years. So besides working on addressing those challenges, we are also well positioned. We believe we're well positioned to take agriculture insurance in Uganda to the next level, working with our partners, of course. During the following years, we plan to further strengthen our partnership by working with even more local organizations for outreach and distribution. We are also in the process of creating an automated system for index design and monitoring that will facilitate decision making and portfolio management from the insurance point of view. And as we have been doing all those years, we will keep improving our index products. As already discussed, mobile distribution across the country is a necessity, and we are working with our partner OCO towards that direction. And finally, an idea we are working on in order to address cash flow issues is that of enabling premium payments at harvest. And yeah, with all those ideas and next steps to take, we really hope that we can further increase in insurance uptake in Uganda. So yeah, as we learn from our past experiences and identify the right approaches, become better and more efficient with time, we are confident that that the future of crop insurance in Uganda can be quite promising. And finally, before closing and giving the word back to you, Dirk, I would like to say a special thanks to the Insurance Resilience Solutions Fund for deciding to support our efforts for the upcoming years. So thanks a lot.
Thank you very much, Eleni. Just to the audience, there are some questions being put in the chat, so please put the questions in the Q&A, which makes it much easier for us to follow up on the questions. I would like to ask Eleni one thing. Can you be a bit more specific about how much does the farmer pay, and what exactly is he getting for?
How much is the farmer paying? Yes. So currently for the index insurance that we are providing, the rates are from 5 to 10%. So it's 5% across the country, with exception of some disaster-prone areas for where the rate is up to 10%. But for those areas, the subsidy is also higher, so it's up to 80% subsidy.
Okay, so of the 10%, then 80% would be subsidized.
Yes, exactly.
Okay. And I saw an impressive number of partners being involved there. And I remember ILO's sessions that managing partnerships is one of the crucial points to succeed or to fail. Yeah. How do you align all these partners? How do you make them work for the same common goal?
Yeah, I would like to give, let's say, the congratulations for that mainly to the Agro Consortium of Uganda and our the local coordinator there and our partner Munyadaka, the technical manager of the consortium. He's managing most of the partners, I would say, and he's responsible for the success. We started, of course, with troubles aligning all those partners and trying to work towards the same goal. But it takes time, and you learn and you grow and you find the right partners to work with and the right ways to collaborate. So yeah, it only comes with time. There is no key to success. And after 6-7 years of experience, I think we are at the point that we can all of us can coordinate with each other quite well.
Okay, and just one question in the Q&A, I think that comes from Rwanda. It's about how easy is it for you to really get the subsidies? I heard about schemes which were subsidized and had succeeded, and then the government wouldn't pay for a year, and then there would be a setback. So how easy and how reliable is it for you to get the subsidies?
Well, the government of Uganda is really engaged in the scheme, and because it has been growing quite significantly, and they can start seeing the impact of it. As I said, it started as a 5-year pilot, which was supposed to end August this year. But because of its scale and success, they decided to extend it until 2024 at least. So they're quite engaged, and there is we don't encounter any issues getting the subsidy from the government.
Okay, and a final question to you, the short one: can you disclose any claims ratios of the scheme?
Any claims ratios? Yes, I did have a look at those numbers before the presentation. So that varies, of course, from year to year. But I believe it is about. I mean, I think last year it was around 30%, 34%. The year before, around 29%. I believe it's something like that.
Okay. There was a question in the Q&A which disappeared to Gentle regarding how do you make the loss adjustments? How is that working?
Yeah,
no,
well,
sorry, Eleni, that question goes to the Indian scheme, to Gentle.
Okay.
Thank you.
Thank you too.
This is regarding the claim assessment. The claim assessment by the natural disaster, the individual disasters, the claim assessment is done by the approved empaneled technicians. Local technicians are empaneled based on their expertise with the small scale fishing sector. We are utilizing this services of the technician to assess the damage.
Okay, and I had one question earlier. Can you elaborate a little bit on the cover that you're getting for catastrophic risk? How does it work? Who's the risk taker for that part?
Yes, the catastrophic cover is based on in the catastrophic cyclone or something. Immediately the claim process is immediately we will intimate the insurance company. They will immediately appoint the surveyors. Surveyors, they will assess the damage of the particular, including the community-based institution representatives are there, and the insurance representatives will be there, and the engineers will be there. Immediately, the loss assessment in consultation with the communities happen. That's why the transparent assessment is ensured. That's why the rejection rate as well as the moral hazard is totally minimized.
Okay, thank you. So thank you, all three of you, for the very interesting presentations. And I would like to come back to Matt with his overview and insight on many different areas. One barrier that we hear for increasing the outreach of agricultural insurance is the data gap. And I would like to ask you, what are the big ongoing data gaps that providers have been describing, and are there any initiatives or trends that whole promise to change the game on access, and maybe also on the data gap. There was a question in the Q&A that goes to Lainey along the same, pretty much this similar question. How do you deal with the gap, or with the lack of historical data? But maybe Matt first.
Mm-hmm. Yeah, reflecting back in 2018, I think we were really aware in that research that just some of the foundational data to make the indices work in the first instance, how to make those weather stations and the satellite data come together in the right indices, that was the primary concern. I think fast forward now, and a lot of those foundational data sets are widely available. And there's been a lot of advances in the indices that are being used. So Eleni was referring to 3 or 4 different types of index configuration that weren't being used like 5 years ago. And there's been this proliferation, I guess, of different approaches that are being used, combinations of data. Machine learning and AI is making that all a lot easier to process as well. But I guess we heard really consistently that sort of the historical and current ground truth data is the big gap. So historical yields and that ground level data is the thing that's constraining moving in that product map down into more comprehensive covers and getting more sophisticated in the number of risks that are being covered. So we're seeing lots of different work around that issue. So things like drones and IoT, so remote sensing is being used to collect more data. And that's starting to be used by multiple schemes around the world. On the analysis side, as I mentioned, machine learning and AI is being used to crunch data in more efficient ways. It's increasing the efficiency of a lot of the measurement. But some of the more exciting things are actually taking data sets that have always existed, but not in a digital form, and making them publicly available in new national data hubs. So at an international level, the CGIAR is trying to make a lot of their data available through a program called Guardian. At a country level, countries like Kenya through CalRO or Ethiopia are trying to digitize a lot of the data sets and make them available through APIs to the private sector to use in these sorts of instances. So folks like AgriFin or Tetra Tech are leading the charge in how a lot of that sort of stuff comes to market. But not just for insurance, but I think for the whole climate adaptation response, that local data, understanding historicals, getting real-time feedback is going to be one of the big things that really needs to be resolved in the next number of years. And standards then become a big part of the equation, because not just is there a need to get the data, but it needs to talk to each other and be in a usable format. So how that data is managed and standards get created, so toolkits for collection, that sort of thing, that becomes a big part of the equation. But maybe Eleni has other ideas or real-time application of a lot of those concepts.
From our point of view, because we are talking about satellite-based index insurance, we're using satellite data that ranges back to 1982. So continuously, they haven't stopped. So we have quite consistent historical time series. That's not an issue for the index.
Okay. There's one question in the chat that I think went to you, Eleni. How and why control the efficiency of the index? Maybe the efficiency means, how do you make sure that the index is accurate and really creates the right result? I remember a paper written by Daniel Clark many years ago, analyzing index insurance in India, I think it was, and there the result was basically the index was just not giving good results, and from the economic perspective, people with the insurance were in a worse situation because they already lost the premium and they didn't get any good return. So how do you make sure that your index is really telling the truth, put it that way.
Exactly. Yeah. First of all, this is why I mentioned that one of the challenges that we have to address is the index quality control that hopefully will start quite soon in Uganda. So yeah, that products are not only good but also not bad for the farmers. So in our case, experience is what makes the products better every year. So initially, let's say that we started in 2014 developing the first products as a pilot, using agronomical advice and knowledge on how to develop products for specific crops. And with only, let's say, a few validation data, it's very hard to find those data to test the index against. But from year to year, and after receiving claims and cross-checking the claims with the index results, we are able to first of all improve the current coverage that we provide. Initially, we started only with drought. Then, for example, that's a good example. We started with drought coverage, and then we saw from the farmers' feedback that's also dry spells is something that is very relevant to them, and that it's not captured with a drought index over the whole growing season. So then this is another parameter that we introduced into our index. And the past 2 years, excessive rainfall also is an extra parameter. And yeah, so we learn and we adjust and we calibrate, and this is an ongoing process, and we become better and better with time.
Maybe Matt, you want to add that there's one question that asking around, about whether AI and machine learning, I guess that's what it's called, can address basic risk. Did you see anything in your analysis, in your research, that AI is starting to be used more comprehensively?
We've seen folks like Pooler starting to use AI and machine learning to great effect. And I think it's the combination of the right data coming in, as well as the right machine learning and AI applications to make that data more efficient. So I think unilaterally, it's not going to address basis risk, but if there is that sort of approach to getting more data into the system and letting those processes do their thing, we've seen that used to some good effect around basis risk.
Okay. Just one thing to the audience, I see lots of comments in the Q&A, which would be important also for everyone else to read. So if you have a comment, just please put them in the chat and make sure you send it to everyone. And the questions are correct in the Q&A. So they're valuable comments, but they are in the Q&A and cannot be seen by everyone. I think that one also goes to Eleni. Have you considered working with other stakeholders to provide a hybrid cover which looks at area yield index as well as weather index cover? So
well,
do you...
regarding area yield index, there used to be coverage some years ago, but that was not successful enough in Uganda. But I believe that Pula is starting quite soon with area yield index insurance in the country. Yes, well, it's not only up to us, of course. It's up to the agro consortium manager, but we are working with every partner that can bring something on board.
Okay. Just one comment on the efficiency, on the accuracy question. There will be another session later today discussing quality control of index. So there's one question, one general question, and I'm not sure who would like to take that up. I'll just briefly read that. Around the world, government subsidies are driving the numbers in agricultural insurance. In 2020, India and China alone saw 250 million farmers insured with an average subsidy rate of 80%. The same is true for many countries, including Uganda, etc. Some cases, subsidies rates even go up to 100%. In the face of this situation, how much is agricultural insurance really private risk transfer? Is it rather state-driven social security mechanism?
We looked at this in some detail in our latest look at the market, and it is becoming really clear that you have to really think about the different types of products that are out there. So some products are purely private sector. So the replanting guarantees that are provided alongside seed packets that's paid for by the seed companies themselves, scaling to many, many farmers. The products that are provided through banks to offset the risk of a lack of repayment. And again, mostly covering inputs. In some cases, that's being paid for by the farmers themselves. And sometimes they don't even have the option to pay for it or not. If they're going to take out the loan, they need to take that insurance up at the same time. In other times, that's offered as an optional extra. Or in other instances, the bank will pay that and increase the interest rate. So in those two examples, it isn't really social security. It's augmenting another product, so either a loan or an input, a packet of seeds or some fertilizer. With governments, I think there's mixed results around the intelligent use of subsidies, and those subsidies can range from sort of 20% all the way up to 100%, as you say. The World Bank and the ILO have been doing some really good work around how to intelligently design those subsidies. So what's the evidence around how much uptake is facilitated in those early years when a subsidy gets put in? And then how do you taper that off so it doesn't just become a forever subsidy, something that has to exist forever? And when it gets pulled out, that insurance scheme would stop. I think Eleni mentioned the idea of using end of season payments for the premiums. Pula's been doing some really interesting work around that, where they found that incrementally increasing the amount that the premium is subsidized only leads to a couple of percentage points increase in uptake from the base situation where there's no subsidy all the way up to about a 50, 60, 70% subsidization. You're really only talking about getting sort of 16%, 17%, 18% of farmers to uptake the product. But that can jump to about 70% of farmers in their pilot programs when you allow farmers just to pay for the premium at the end of the season. So that creates quite a private sector driven approach where, I mean, the customer is paying for the premium. They're just paying at a different point in their growing season. That creates additional challenges, I guess, for the insurers, because they need to often front that big insurance premium bill at the beginning of the season. But there's all sorts of innovative ways that blended finance or subsidies can be applied in that scheme. So I guess what we found is it's really not a single market. We're talking about all sorts of different product applications, and in government schemes, there's intelligent ways to design subsidy, but there's also alternatives that are being tried.
Yeah, thank you. So we spoke about availability of data, data quality, quality of indices and the results, subsidies, role of governments. I would like to talk a little bit about the client itself and how to engage with the client and how to encourage the client to be part of it. And Chantal, maybe you can share some of your experiences and how did you engage with the communities and convince them that this is an important product, an important solution for them?
This is one of the great opportunity for us to pilot this thing with the community. What we did, we first engaged the community leaders, the rural the community leaders, and engage them, and we explained them. That's two set of capacity building measures taken by the program. One is for the exclusively the staff of the community-based institutions. for underwriting and the claim administration, how to do this underwriting, the collection of documents and the verification of assets. That is a Herculean task for us initially. We design entire thing, that the entire operation is designed by our program. That's why the two set of capacity, one's for the staff of the community-based institution, one for the office bearers of the community-based institution, how to manage the claim and the underwriting situation, These helped a lot, particularly in the underwriting as well as the claim administration. That give the exact, the product detail is exactly penetrated to the community. The do's and don'ts is clearly mentioned in each and every place. That gives more impetus in the implementation.
Okay, thank you. Eleni, maybe a question to you that also came out of the chat that I would like to rephrase a little bit. Information gap is very frequently a problem, that people don't understand the product, don't know how to use it. At the same time, you have to go to talk to your clients. As I said, people don't wake up in the morning, don't want to buy and want to buy insurance. How do you encourage your partners to invest in explaining their product, to invest in engaging with the communities?
Yeah, well, this issue starts from let's say from us. So the solution to informing the end user starts from the index provider, which has to do a very, very good job providing very transparent and clear information to the insurer itself, so that they can forward the information then to their partners and their clients and be efficient while communicating that information on the ground. So along with our partners at Uganda and with the Agro Consortium, we have been creating and providing information material. We are organizing workshops and trainings. We are training the trainers in order to get the word out as efficiently as possible. Also, there have been some radio shows in Uganda talking about the benefits and the added value of index insurance, which had quite some appeal. And I think that was also a very clever idea to use radio, which gets the words across the whole country, and you don't have to reach the farmers yourself. But it is definitely a challenge, especially to reach farmers in the most remote parts of the country, and it needs quite some capacity. So we are definitely planning to further invest into that because there is still this information gap.
Thank you. Looking at the time, we have 5 minutes left. I would like to ask one last question to Chantal out of the Q&A, which is around what happens to the profits. Can you share what happens in case there's a profit? Where does the money go? Does it go back to the communities? Does it stay in the system?
Yes, the profit for the corpus fund created by the program along with the surplus premium, that goes to the corpus fund of the risk fund of the fee farms, the community-based institution. Then only if we go for the trend of the claims is increasing, the per thousand claims for thousands, the claims ratio is increasing, trend is there. The individual accident is more because of the movement of the merchandise fishing, merchandise vessel. That's why the individual accident is rising. That's why in future, there is a dependence on government is totally discontinued. The government dependence is not there. Otherwise, if anything is happened, the government has to give the compensation to the clients through their department. Now it is reduced. And one more thing, one of the salient feature of this program, that the insurance companies never disclose always telling the marine insurance a loss-making portfolio. Due to our continuous 3 years claim experience, we bargain them that for the catastrophic losses, the claim amount from 50% to we increased to 70% due to the data availability with us. Now the claim, now they can't tell us that marine insurance is loss making. It's a profitable one. That's why the some more than we reduced the premium from 2.5% to 1%. In 1% that we are giving 543. Next year we will bargain, reduce the premium from the insurance company, and we will restructure the terms and conditions also. Every 2 years we can discuss with the insurance company. We will go with and sit with and negotiate with the terms as well as the rate. It will be directly go benefit to the clients. Last 10 to 20 years, they are collecting 4.5% maximum, minimum 2.5%. This is a lot of money from the downtrodden people goes to the insurance company. Now it is totally curtailed. This model can showcase. Previously, there is no data. That's why we are searching for data from other sources. That's why that is one of the key learnings from this program. Thank you.
So talking about key learnings, and I would like to start with Eleni maybe. We have seen programs are rising and are becoming more and more available, but still there's a huge protection gap. And from your perspective, what are the main barriers still for increasing outreach, for making agricultural insurance more accessible, affordable, and available?
Yes, so I already mentioned a few of those in my last slides. I believe the main, let's say, not barrier, but the main way forward in order to scale up insurance is to identify appropriate local stakeholders and distribution strategies, because index insurance on itself is not what farmers would like to buy, and they wouldn't have to. So it needs to be part of other solutions, of financial solutions, of inputs. So identifying these strategies and finding the right partners to work with is a challenge, but I think is the only way forward for insurance. And also spending a lot of effort on capacity building, which I keep mentioning again, but it's really important because the market, even if we see some impressive numbers in Uganda, for example, the market penetration is still low. And we definitely need to get the word out and explain the added value to the farmers, which is a big challenge. So capacity building, awareness raising is also very crucial for a successful index insurance or insurance in general scheme.
Thank you, Eleni. Chantal, from your perspective, what are the main challenges? And I kind of ask you for a short answer, looking at the time.
Okay, major challenges in the long term. The monitoring mechanism available in the system, and that is one of the key challenges that I perceive from this program. And that to encounter that challenge, we are striving for a toolkit for the implementation for each and every stakeholders. The toolkit for the organizational management as well as the total administration. And secondly, the bundling other insurance products with this product. It will be more impetus as well as the more challenge for other competition also now play critical role. And the government's policy also, if the government is more subsidized program, if the government is started, then it will be a great challenge in future.
Okay, thank you. And the last word goes to Matt, who started the presentations in this session.
I'd agree with everything that Chantal and Eleni have said. I think we've got a really good basis of some core products that are working. And the challenge is how do you make those more efficient in the first instance, extend cover and deal with basis risk issues through better data and technology in the second instance, and then really get local insurers interested in driving this market and scaling it up as demand picks up for all those products over time. But again, reaching those smallholder farmers and those distribution models that Eleni was talking about is the key to making all that work.
Okay, so distribution, getting stakeholders interested, as well as education, and don't make it too complicated, the product. Thank you to all three of you for this very interesting session. Time is up. I invite you all now for a virtual coffee break, and then I see you in the next sessions in 30 minutes. Thanks again for everyone for joining, and see you soon. Bye-bye.